Welcome everyone to this video. Let me drink my coffee actually. This video is going to be a complete Bitcoin analysis, rundown. By the way, this analysis is not going to be a chart analysis. This is a professional level macroeconomic / fundamental type of analysis. And to show you guys why you should watch this video and just to show my qualifications, let me guys show you something. This is an analysis that I posted the 4th of August 2025, where I predicted that the price of Bitcoin is going up due to the Federal Reserve cutting interest rates and the start of the cutting cycle, etc. And as you guys can see, let me go to general chat. This is my Discord, by the way. I post analysis in here on the regular. You guys can see here, look, price went up from 113k to all the way up to 123k. People made money up on their portfolios. Great analysis. And even before the price of Bitcoin crashed, I already gave it away. Look, August the 14th, I gave signal that they should exit now. This is one of my followers and my partner as well. Told them, yo, this might be time for an exit, because I already knew that something is about to happen, inflation is running hot, etc, etc. So in this analysis, I will try to simplify complex terms as much as possible. I want this analysis to involve every type of traders, like even the new traders, the people that are new to my channel, that don't know anything about macro or whatever. I want everyone to learn something new and improve their trading in some way or another. So Bitcoin, what is going on? To predict the future, we need to understand the past. Okay, cool. So what's been happening? The reason that Bitcoin went up to begin with is due to actually a variety of things. But most importantly, it was due to the horrible job numbers. So this is the NFP. You probably know what the NFP is. I'm just going to briefly and simply explain it. It's basically the amount of jobs added in a month in an economy. And as you guys can see, it was a horrific number. The number was so bad, they actually had to revise the old number to make it look good. That's how bad the number was. So this, coupled with the Federal Reserve cutting cycle that's expected to start the 17th of September, as you guys can already see, we're expected at 0.25% cut, a 25 basis point cut in interest rates, and bonds already pricing that up. This led to Bitcoin just flying. Okay, so simply put, bad job numbers. They need to lower interest rates so people can borrow money from banks, start businesses, hire people. Okay, this is the simplest explanation ever. It doesn't get any simpler than this. But there is a catch. You cannot just do that, because you're gonna create inflation. If you give everyone money, you're gonna create inflation. So as you guys can see here, there was also another factor. The Federal Reserve was also being pressured non-stop. Jerome Powell was being pressured non-stop from the president. I will let you guys listen to this video.
I told him he's doing a very bad job. He's way late. That's why I call him too late. Jerome Powell is too late. He's way late. Interest rates should be coming down. Jerome Powell has done a terrible job. And frankly, I don't think he could do a worse job.
Okay, so you guys heard that. A variety of things push the price of Bitcoin up. Cool. Okay, why did it drop then? If everything is so bullish, if the bad job numbers and the president is pressuring the Federal Reserve and the cutting cycle and bond yields drop, everything. If everything is just bullish for Bitcoin, why did it drop? And how did I predict that Bitcoin is going to drop? So this all happened because of one single indicator that came out last week, which is called the Producer Price Index. So Producer Price Index, as you guys can see, for the month of June, the month of July, you guys can see this, right? This is insane. It went up by way too much. And this confirmed a lot of things to us as investors and to the Federal Reserve as well, because Jerome Powell was actually on top of things. He knew that this will happen eventually. You cannot just print and allow people to borrow a shit ton of money without creating huge amounts of inflation. He knew that beforehand. So why does this even matter, by the way? Why does this producer price PPI matter? By the way, this PPI, doesn't it sound familiar to another thing called CPI? You probably know what CPI is. Even if you're a complete beginner, you know what CPI is. So let me explain the difference briefly between PPI and CPI so you understand what's going on even better. CPI, simply put, is Consumer Price Index. This indicator, economical indicator that gets released every month, measures the level of inflation on the consumer level. Let's just say you buy Coca-Cola for $10. You go to the store tomorrow and it's $12. That's inflation. It went up by price. Cool. But there is another indicator that specializes in measuring inflation for producers, the people that produce the goods and services, okay? They have their own indicator as well, and it's called the PPI. For example, as you guys can see here, let's just say you're in a factory, you produce these Coca-Cola bottles, and I don't know, you import glass, you import plastic or ingredients for your Coca-Cola from a foreign country, and they went up by price. Therefore, you have to cut the budget, you have to lay off some people, and eventually with enough time, it's gonna show up in this dude's Coca-Cola bottle price. Understood? So why did PPI even matter? Because, by the way, there is a lag between PPI and CPI. Before the factory increases prices, there is a lag. There is a couple months of lag, probably even more. So this confirmed that Powell was right all along. Well, you see, Jerome Powell was already scared that tariffs are going to create inflation. If you don't know what tariffs are, simply put, since Trump became the president for the second time, the first thing he started to do is impose tariffs on the whole planet, basically. There wasn't a single country that survived tariffs. Every country got tariffed. 20% here, 10% there. And tariffs, let me explain tariffs briefly to you. I don't want to go in depth in fiscal policy, but I'm gonna make it brief. So even if you're a beginner, you'll understand. Tariff, let's just say the US is the biggest market in the planet, which is true. If you want to make money, you have to sell things in the US. Everyone wants to sell in the US. Donald Trump knows this. So he start taxing people. He's like, hey, if you want to sell your stuff in my country, you might have to pay me a 20% tax, 10% tax, 5% tax. So these exporters, to negate or to offset the tax, they will increase the prices of their goods they're selling. So it's gonna show up in the factories first. This factory, let's just say it imports glass from China, and you impose the 20% tax on China. So the factory that sells you the glass, you're importing glass from China. The factory that sells you glass, it will have to increase the prices of glass, let's just say, by 20% as well, just to offset that tax. So if it's selling you glass $10 a piece, it's gonna sell you glass $12 a piece, or plastic $12 a piece, or whatever, right? I'm just giving hypothetical scenarios so you understand. So, and for the factory that's in the US, right, because it's buying this glass more expensive. You used to buy it for $10, now it's buying it for $12 because the guy in China that's selling him the glass increased the prices so he can pay the tax to the president or to the government, okay? The guy that's gonna eat up that price increase is you, the consumer. And this is what Powell was scared about all along. I'm gonna play the video, just watch.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. Higher tariffs have begun to show through more clearly to prices of some goods, but their overall effects on economic activity and inflation remain to be seen.
Perfect. Because this is an old video, but now it happened. It showed. It finally showed in this PPI. Okay, perfect. So as we said before, there is a lag between the producers and the consumers. From the price changes from the factory all the way to the supermarket, they take time. How does this help us? Like, how do we benefit from this? How does this even tie up to Bitcoin? Just keep listening. So the reason that this PPI indicator is so important is because it's correlated to another indicator called the personal consumption expenditure. This indicator is so important. It's literally on the front page of the Federal Reserve website. It's their favorite indicator to measure inflation. Look, this is the Federal Reserve, federalreserve.gov. It's literally here. They show you the interest rates, the current interest rate range, which is 4.5%. They show you the unemployment rate. They show you the growth. Okay, let me tell you something about the Federal Reserve. The Federal Reserve has two missions. Jerome Powell has two missions. It's called the dual mandate. It's to keep inflation under control and to ensure maximum employment. As you guys can see, inflation, it looks around the 2% range, which is the sweet spot, by the way. 2% is where the Federal Reserve wants inflation to be. You guys can see the COVID spike when they started printing a shitload of money. And unemployment to be low. Max employment, therefore low unemployment, okay? Look, COVID as well, unemployment went up. Everyone was getting laid off, whatever. Okay, cool. So this is the catch. This PPI indicator that just got released earlier, right? Which probably was due to tariffs. It came very hot due to tariffs. It's very correlated with this indicator that's on the front page of the Federal Reserve, which is the Federal Reserve favorite indicator to measure inflation. They're very correlated because the components of the producer price index, the majority of them, they overlap in the PCE. They're the same components. So people, investors, smart money, right? People that you guys love to speculate about, like BlackRock, JP Morgan, Goldman Sachs, Citadel, all of these big players, right? Investment banks, institutions, hedge funds, whatever. They're smart. They're on top of their craft. They're already selling the shit out of Bitcoin. The big people that own a lot of Bitcoin, sophisticated investors, they're selling Bitcoin. They predict that PCE is gonna come hot. If PPI come hot, high chances that PCE is gonna come hot. And if PCE comes hot, what does that mean? That means there is inflation. So it doesn't make any sense for the Federal Reserve to cut interest rates by a lot. If you still don't understand, no or little cuts in interest rates equals a strong dollar, because you want to keep your money in dollars, right? You gain a 4.5% interest or a 4% interest, which means it doesn't make sense to keep your money in Bitcoin. That's why people are pulling their money out of Bitcoin and dumping it into the dollar. Do you guys understand? This is how financial markets work. Money goes from somewhere into something else. It doesn't just come from thin air or disappear into thin air. Okay? So this is what the smart investors are thinking and looking. This PCE indicator, okay, is gonna come out the 29th of August. Okay? Friday. So this August. So 7 days from now. If this PCE, core PCE, comes out higher, sell the shit out of Bitcoin. It's gonna drop to, I would not be surprised if it breaks 100K levels, goes even lower than that. If it comes as expected or slightly lower, that's your buy signal. That's where you're gonna make a lot of money. Okay? This is a signal given from me for free. You guys make money, good luck, man. Like, I'm not gatekeeping anything. That's literally what's happening right now. By the way, this complete analysis, there is another in-depth analysis that I posted on my Discord. You guys can join my Discord, read the fully in-depth analysis. Posted it on there. I'm gonna post it on X as well. And I wish you guys the best. Guys, if you guys enjoyed this video and you find it helpful, it really takes a lot of time for me to make these videos. I put a lot of effort, a lot of research, a lot of try to simplify my words and brain power into this to make it like comprehensive and understandable for you guys. If you guys actually mess with the video, like the video, share the video with people you know, maybe help them invest their money even better. And join my Discord. I post free analysis on the Discord all the time. I explain exactly what's going on, different assets. You will not find this level of analysis for free anywhere on the internet. And I wish you guys the best.